So we're here for boot camp day number, I think, 13. What are we at? Let me check. Boot camp, first camp. We lost our days here. Okay. Day 11, 12, 13, 14, 15. Right? 13, 14, 15. Day 15. Okay. 14. Well, I don't know about that. Let's see. Should be 14. You're right. Because I took Monday off. Jump ramp. Okay. So we are on day 14 of the boot camp. Okay. So we are going to have a quick, not quick chat. Something that's super important. This is structure is king. Now, I'm going to tell you guys as we move through this, and we're into day 14, about halfway through the boot camp, right? We have, we've really covered a bunch of the basics of what Killshot does, how to use it, how to understand it, TV stop losses, those types of things. PB&J was yesterday, which is one of my favorites, because I tend to jam all my trades, not even just the PBs, because I'd rather just take what the market gives me. We're gonna do a little close here. We're not going to do any back testing today. Normally on a Friday's back test, but because we're in the middle of the boot camp, once we get into a regular schedule, we'll do Friday back tests. But what we're going to do today is I'm going to finish with a little bit of mindset, just a little 10-minute rant. Hopefully I can keep it under 10 minutes before I get a little crazy. I talk and talk a little bit about mindset here before we go. Okay, so what we want to talk today is about structure. Okay, now something that's super important. I'm not going to go into break BOS, change a character. I'm not going to go to any of those terms and stuff. I'm just going to show you how we identify short-term structure shifts. It's something super important as we're scalpers. We want to be able to get into these structure shifts. Okay, now it's going to help us if maybe we want to take a counter trend trade. Say maybe we want to get into a position as it breaks at 238, and we want to confirm that it wants to go that direction. And in the short term, we want to take a look and see how this structure is shifting. This is making me very, very happy because I'm not going to lie, I jammed this pullback up here, took 20, but I really want a nice big pullback back to this 238, which is a long ways to go, which I'd really, really like that pullback to come back into this space. But what we're going to do right now while this is pulling back, let's see if we can get a nice space. If you're looking at some of this structure and how we're going to identify it, you can see there's some beautiful structure here. The one thing that Killshot does for you is it identifies structure. Okay? Now I know support and resistance levels. These support and resistance levels are structure. Right? And as you can see, right, this was a break of structure. We talked about BOS. This was a break of structure. Pulled back to this resistance level, which is essentially structure, pulls back to it, bounced off of it, then broke this structure, pushed up, pulled back, that previous structure, broke it, right? So you can use these support and resistance levels as your structure identification, right? You can go and take a look. I mean, you could talk about this thing sitting in this zone, up and down, previous structure right there, right? Already aligned for you. Look at it over here. Hit it once, hit it twice, finally broke it. Bam. Right? So you can see that these resistance levels are giving you identification of previous structure. Right? So what I want to do, and what we're going to do, is we're just going to talk about how we use these things. Right? So if the chart is, but we'll just show this one as well. You can also change the settings on these if you want. If you want to make these zones, I like to just make them lines because I like to train my eyes to identify the zones. But if you want to come into the settings here, you can come down here to your, where are we here? Stars. Okay, let me find it here. There is it must be the style. Okay, there is a part in here. So these are some of your resistance levels. Okay, so if you want to change them, right, I have them based as a line. Labels and lines. Now, if you want to turn them into zones, you can literally click these buttons, and these are going to give you zones instead of just the lines. So it gives you a little bit bigger of an identification. I naturally see them. That's why mine are lines. But if you want to turn them into support zones, right, you can see their zones now, right? Resistance zone. It's going to give you the full zone. Okay? So if you want to get Killshot to do that for you automatically, you can feel free to do that. Go turn those things on. It's going to give you a better zone and a better idea of where the structure is lying. Okay? Now, why do we want to know structure? What's important about structure? Right? Structure has got two things. Okay? Structure is confirmation of direction. Right? We're going to talk about, the higher highs and the higher lows indicating moving on an uptrend. Right? We'll identify those things. But what's also important, and this is why I'm a price action trader, right? So we want to know what's going on at prices, right? So when you see this come and hit a couple times here, that means there's volume sitting in those levels, right? So we have to be aware of it. We have to be aware of these levels because there was a bunch of buy volume here, then sell took over and pushed it right back, hit it again, pulled back. So we know that there's volume sitting in this. There's actually literally money sitting in these levels. And when it comes up, hits it a bunch of times, grabs it, pulls back, grabs some more, bam, breaks that, money's on the move. Okay, or money's moving now. We want to find our opportunity to join it, right? Money's moving. Okay, so that's what's super important about this structure. We need to pay attention to them, right? Like getting into a pullback here, right? Our pullback in Jam came all the way back to the 50. Finally engulfed this candle on this candle, broke to 20. You got into it right here, right? Got all the way back to this structure, which was actually, almost a TP, right? Almost a 50 pip TP right there. You protect that thing as it gets to that structure because it can very easily just come up here, grab the money it needs, and turn back in, right? So that's why it's important to identify, and that's why Killshot does it. It does it automatically for you. And the importance of these structure levels. They're going to put support and resistance levels up for you, okay? Now, one thing it also does is after it breaks this level, and lots of people and lots of educators and traders just trade these zones. Right? They identify support and resistance zones and they just trade them from zone to zone or breakup zone, retest of zone. I add those as pieces into what our indicator does so you can get even better signals, right? And so what we're doing is I want you to identify this structure. There's two very important reasons why we can identify structure, okay? And I want to show you guys. You might have to go read this in the 5. But I want to find it. Let's go to that big drop yesterday, right? Big old drop to close the day. Bam. Okay? Now, in here, it really picked up a zone, right? Picked up this zone. And as you can see, as we go through this, we can talk about the structure that created. And this was a really hard day for me yesterday because I got a few pips out of it. I knew it wanted to continue down, but I just couldn't find my opportunity to join it because it wouldn't come back to this 50. Pretty annoying. I mean, I got plenty of pips out of it. I did over my goal, but I knew there was more in there, but I just couldn't find a place to get it. So, well, what you can see is the structure that this created, right? After it broke through that zone, which I've already taken off, it pulled back, right? It's running, and it pulls back slightly, okay? Hits here, breaks this support line that shows up and continues down, right? Picks up that money and continues, right? Pulls back. This is where the structure starts to get interesting. We're going to label this thing all the way down, okay, to the bottom, okay? So this is our structure, okay? When I'm going to label these things, right, this broke through all these levels and then pushed here, right, and created a lower high. So this is something that we need to be aware of, okay? This is just showing us where our trend wants to go, okay? This created right here a lower high. I'm just going to. Right? And then if you want to know what this chart's doing and what the structure is telling us, hey, what is structure telling us? What's structure telling us? Okay? Structure is telling me with this next one, what does it do? It creates another lower high. So it's telling me the structure, not only is this thing red and running, dropping, the structure is telling me that it wants to continue down. Right? Because lower high, lower high, lower high. And it's just continuing on that trend. Okay? Now let's talk about when the structure starts to shift. And now it goes into a no trade time, but we're still going to talk about this structure. Right? So you got lower high and you got lower lows. Right? That's to show you, right, that this is falling. The structure, what is the structure telling you when it's creating lower highs and lower lows? It wants to continue to go. And this is why I want you to be aware of these things. It's going to help you with understanding where the chart wants to go next, especially in the 1 minute. Okay? So, falling, right? And every time it pushes back up, it breaks and creates another lower low. Now, what happens here? Okay? What happens here? Something happens here on the structure to tell you something. What happens here? Okay? This doesn't actually create another lower low. So it has this push away, right? It's broken all this structure. It actually pushes, it breaks a couple of these levels that you see here, pulls back down to it, and right here, it creates a higher low. So for me, as a scalper, I see something like that, and it actually did come over here and break this, and then shift again, right? And then you can see it starts to shift and create those higher lows, and then it finally breaks this structure that's right here, right? So it's 100%. This is something that I notice, okay? This is something that I'm looking for. Because if I do want to go the other direction, obviously I want to wait for that 238, but first thing I want to see is the structure change. I want to see the structure change. And that's the first thing that happens here, right? It pushes back up, it breaks this little high it had, and this little high it had, and it comes right to this level. It stops, pulls back down, and if, this is why I'm like, okay, this is getting ready to switch. And this is why I can identify it, because it didn't continue down, right? It didn't continue downwards and create another lower low. So let's put the brakes on. Now it does create another little one here, but it doesn't break this one. If it breaks this one, then it's going to want to continue. Came back down to grab a little bit more volume, maybe get some more people in cells before I want to start to head back up. Okay, so it didn't break this one. This rate to me is an early warning that this wants to start to move this direction. Okay, right there. Now I'm not going to get into that because I still want more confirmations. And the next confirmations that I want is I wanted to continue this structure to see that continue break. See that structure to continue to break, right? And as you can see right here, it breaks above, right? This creates a higher high. So for me, I'm like, okay, it's now broken a bunch of this structure, right? It broke here, now broke there, broke this level, and now tapped to this one and pulled back down, but it's holding this other structure, right? As you can see, then we get into low volume, and it's hard to, and it comes back down and taps the structure again. So for me, when I'm not trading in this time anyways, because this is Asia and the volume is crappy, but you can see it holds this level. And if you shift over to a higher time frame, you're like, okay, it's starting to hold this level, structure starting to hold. You shift to a higher level, right? Higher time frame, right? We can see that on this higher time frame, it's really holding this level. So I'm like, okay, it at least has to break up out of it. Now this is when I'm getting ready and getting excited for it to break this 238. Because now, look at it, right? Even on the 5, right? Look at this. Up, back to the 50. 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 Continuously, even in low volumes, creating higher lows. Yeah, 100%. That's the switch, Lisa. Perfect. That's the switch in structure. So that you know trend is getting ready to shift. And it does, right? You see it hold here. Starts to break some of that structure up. It holds that bottom again, and now it finally starts to break above. And it's breaking above and pulling back. It's a very good job. It's pulling back and creating a higher low, creating another higher low, creating another higher low, until it comes all the way back up. And this is news, so we got to kind of ignore what's happening here because this is news, and it goes right into open. But after all this, and this is why we avoid this volatility, right? If this thing starts to create all these higher highs and higher lows, right? So now you look at it, you're like, okay, the trend hasn't quite shifted yet, but the structure has, right? It starts to create this. At first, it holds this level, okay? Then it starts to break them, creates a higher low, breaks it again, creates a higher low, breaks it again, creates a higher low, breaks it again, okay? Now, this is why we avoid volatility. Okay, you can see the structure starting to shift. It's not strong. It's not doing really big moves, but the structure is starting to shift upwards. Okay? 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 The structure is starting to shift upwards. And this is, of course, why we avoid news and open, because look at it just going up and down. This is why we avoid this volatility. Right? Your little 25 pip stop loss or 30 pip stop loss isn't going to survive in here. And you could have a trade, it hits all your parameters, it's going the right direction, but the volatility just isn't going to play ball. Okay? So that's why we avoid this time. Because as soon as this time ends, right around 8 o'clock, it bounces around a little bit, then what does it do? What does it do after this volatility? So we had 6:30 news, which is that big wick, pushes back up, comes back down. Then we had open, okay? Right? And then we have open, up and down, up and down, up and down. That's because your stop losses, we're using small stop losses. So if this thing isn't taking off and trending, then you're probably going to hit your stop loss. And it'll usually hit the stop loss and go right in your direction. But what does this thing do? Look at the structure. After all this volatility, what does it create right here? That high, that previous high, right? This previous high, right here, right? This was our previous high before we ran into news. Okay? Then after news and after open, it comes back up here and is fighting at that previous high. Going up to the 238, wicking back down, going up to it, wicking back down. And then it starts to create its structure. So I want you guys to start to see these things. And if you have to throw an arrow up and identify it, I know this isn't the smoothest arrow that you can see there, but then it finally, bouncing at that high, then it goes up and it breaks this high that we had at news, breaks that 238, and starts to create structure one direction. So as you can see, the structure, we take the volatility out of the middle and it goes right back to structure, right back to what the market's doing. Right? Goes right back to structure. And so I want you guys to be able to identify these things. Right? And then it comes back here, it breaks that 238, which I was waiting for, but because I live in a stupid country that we get snow all the time, I was shoveling snow when this happened. And so I had to try and find a secondary entry. Right? And you can just see, finally breaks that 238, pulls back to grab more money, creates structure, pulls back. And as you can see, if we go to the 1, like you're going to see this structure as plain as day on the 1. Right? Like it's literally breaking up above it, pulls back to the 50, pulls away, pulls back to that previous resistance. Breaks away, pulls back to this previous resistance. Pulls back to the 50. And this structure is just telling you, I'm going up, up, and up. Now we have a little bit of a shift here, right? Now let's talk about the structure we're looking at in real time. Has structure started to shift? I mean, I think we can keep up, Thomas. I mean, we got 5.5 inches today over last night. I think we can keep up. I mean, I think Norway gets lots of snow, but now let's talk about the structure shift. Yeah. Let's talk about the structure shift. This pulls all the way up, a little breakout, comes back down, breaks structure. Now, let's remember what trend we're on. Okay, so you can see it comes back to this structure, it just flashes below it and immediately right up above it. I mean, it was, but we ran over here. Right? No trade time yet. And you can get into it up here too as well. Right after no trade time, right? This was a great pullback back to the 50 that would have paid you back. But you can see that this structure started to shift. Now, are we going to be ready to just jump into a buy here? Now, of course, it's on trend. It's above the 238. It just had its pullback, and now it's broken back structure. So I'm going to talk about why I'd probably be okay with this buy. I would jam it, of course, because you can see there's a whole bunch of levels sitting here. But it has gone and done something else. So it came back down to this support level, bounced off it, broke it. But one thing I'm going to tell you guys, and this happens, it's much harder to see on the 1, but it happens very well on the longer time frames. Okay? It happens really well on the longer time frames. Is that this thing? What do you think this was? We're talking about structure. We're talking about, right? We have this. What do you think this little flash below is right here? What would I call this? Right where the green star is. What do you think you'd call that? If this thing's on a long-term uptrend, it needs to find money. So remember when structure starts to show itself, Then structure, this only broke one little support line and it was immediately back above it. So this is not giving me, right? It gave me one, you got it, Chris. This gave me one lower high, right? It just fell right out of here, gave me one lower high and immediately rejected it and broke it. Now that's not saying it's not going to come back up here and potentially fall down. It's Friday at 11:30, so this could be a pretty tough place to try and grab a trade, right? This will probably go back up to the top. But this was a little liquidity grab. There's some money sitting here, and this thing had run out of steam. The buyers had run out of steam. They're like, we can't continue to buy this, push this thing up. So we're going to stop. We're going to take some of our profit. We're going to push it back down, okay? Let it come back down. Exactly. Let it come back down. Take out a bunch of people who were jumping in at this breakout, right? All those, that breakout trap. Breakout, trap to the stop loss, grab a bunch. This is that move. We'll talk about that move as well. We'll talk about the trap. This came back down, flashed below that support. People are like, oh, okay, reversal's coming, reversal's coming, reversal's coming. Sell, 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 right back. And this thing's going to go right back up on trend. Right on the trend it was looking for. It's now pulled in money. It now pulled in a bunch of buyers here, took their money, pulled in a bunch of sellers here. It's about to go up and take their money so they can continue on this trend. Now, it is Friday, so I won't get too excited about this thing going and running a couple hundred more pips. It very well could do that, but it's Friday. So people could be selling off before the weekend. But this was a beautiful liquidity grab. And then it immediately gets back above structure. Yeah, this structure right here, right? Immediately back above it. Pulls back down to it, holds. It is now starting to put some more money into the market so it can head up. Let's talk about this entry. Let's talk about our breakout. Okay? I'm going to just give you guys a little bit of feedback. I'm going to get on that. So everybody's okay with structure. We can see the higher highs and lower lows. That's something you should see on the market. It's the first thing I ever learned. Naked trader, there was nothing on the charts. All I did was look at the structure of the chart. There wasn't support. How do we explain currency that don't seem to have no stop? They'll always have a stop eventually. They're lower volume. So if there's a low volume currency and people put a whole bunch of money in it, it's going to run and run and run. So, and that can happen. But let's talk about this move right here. And this is going to be, we'll probably just close on this. I'm going to talk about the shift you need to make. Okay, everybody's good on the lower lows and lower highs and how we identify structure. I want you guys to train your eyes. I can literally open up a chart and look at it for 5 minutes and be like, hey, this is where it wants to go. With pretty good probability. I was a naked forex trader before any of this stuff. I created these things for higher probability, and so I can teach better. But I could take all this stuff off the charts and just go to work and make money. So this structure, I want you to see these with your eyes first. Okay? So I'm going to take this stuff off for structure. Why is it so important? Because structure is the first part of the story. It's the first page in the book. You open up and look at the chart. What is structure doing? What is the chart? What is the chart telling me? Now, we can talk about what Killshot tells us, talk about what the EMAs tell us. Those are all parts of the story. Well, what is the chart telling me? What is the actual movement of this market and the chart telling me it wants to do? And when you see structure like this, on the 1, this might get you a little bit, I don't know. But if you go to the 5, this structure is playing out, right? It had a little break here, flash back down to the previous structure, has bounced, is pushing back up. And like I said, it's Friday, so we want to be a little bit careful. But look at that little flashback to space. See, I think this is probably going to find its way up. It'll go slow, and then the next hour, it'll just rage out of here. But you can see on the 5-minute, that hasn't really broken a lot of structure, right? It just broke this one little piece of structure, and then it immediately came right back up to that zone. Now, this could be a grab to sell off, so we have to be a little bit careful. And if we take a position here, we'll have to jam our stop early. But this immediately went right back up into the zone. So for me, structure is still telling me that it wants to go up. It comes back down here and breaks the bottom of this. Now we're talking about a reversal. Okay? I'm going to clear this off. And I just want to talk about the breakout move. Something super important to talk about. And I'm going to tell you how I shifted as a long-term trader. Okay, how I shifted my trading entries, how it wasn't about my parameters. Okay, it wasn't about my parameters of my trade. Okay, it was about where I was getting to. Okay? A lot of people think, I'll get my, hey, come on, just work. Okay? A lot of people will think, I'll just make my stop loss bigger, or I'll make my stop loss smaller, I'll make my TP smaller, I'll make my stop loss bigger, blah, blah, blah. And this is irritating. Get out of there. Okay, now we're going to talk. You can see it's just pulled back up there, holding this space. It's still breaking structure that way. So now it needs to pull back to grab volume. And if it comes back down here and breaks the bottom of this and breaks that 238, now structure is really shifted, right? I still think this is going to hold here, probably push up. But let's take a look, okay, at some entry. I'm going to go away from structure now so you guys are all good on being able to identify those lower highs and lower lows. Those are going to tell you what the chart wants to do what it wants to do before kill shot tells you. But I want to talk a little bit just about an entry. Okay, let's talk about both of these. Let's talk about breakout to pullback. Now, all I'm going to do is throw up a long position and show you. Okay, let's talk about breakout to pullback. Why it's important to wait for the pullback. I just want to get in here. Come on, TradingView. I know it's Friday, but you got to work for another couple hours here. Okay, we're using a 25, 30 pip stop. Let's say 30 pips, okay? Let's do a 30 pip stop loss. I want to show you the difference. And I want to show you why I changed how I traded. Why I shifted how I traded. Because it wasn't about my parameters. Now, a lot of you guys will go take a look at your trades and you'll be like, oh, maybe lower my lot and give a much bigger stop loss. And that can be a part of it. That might be that you're just getting into it and too far away, etc., right? But I'm telling you, if you focus on where you're entering into a trade, it'll completely change your trading. Because this is a breakout. And I'll tell you, when I first started trading, all I did was trade breakout. And it was a much different market. The market was on a uptrend for 18 months. I was in the middle of it. It was coming out of COVID. The market was just up, 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 up. So breakouts like this would just go and take off and run 100 pips before they'd come up because there was so much buying power behind it, right? So much buying power behind it. Okay, so this was how I used to enter. Once that market shifted, though, these became traps because there wasn't that high amount of volume sitting in the market. So the market had to pull back more to get more money to continue on its way. So all these trades were turning into losses. And if they weren't just a small loss, they were a big reversal back down, these breakouts. Finally got enough volume to head back down, right? Now, I just want to show you the shift and why we don't take breakouts. We are not breakout traders. We are pullback traders. So, right, let's do 30-60. Okay, that would be 1 to 2. Let's just do 30-60 as our friend. Okay? Right, we jumped into this breakout. What did we do? What happened? Right? We jump into this breakout. What happens? We take a loss. So I realized, I could stretch my stop, and maybe 2 or 3 of these would work out, right? When I first started, but then eventually one of them would take me out in a really big stop loss and just keep me going backwards. So I realized that it wasn't about where I was entering the market. It wasn't about what my parameters were of my trade. It was about where I was entering the market. Now let's take the same parameters of a trade, right? The exact same parameters, and let's just move our entry. Let's just say, instead of trying to jump into this pullback or this breakout, let's just wait for the market to pull back. It has to pull back eventually, right? Let's just wait for the market to pull back. Now let's just shift it. Market pulled back. We let it hit the 50. Pullback happens, engulfs, right? The exact same parameters of the trade are TP. Right? The exact same parameters of that trade are a TP, or at least a position where you're break even and you're not taking the loss. The exact same parameters of trying to jump into this, not controlling our FOMO, jumping in here, hits our stop, and how many people have jumped in here, and it comes back, hits our stop, and immediately goes our way. It's not because we made a bad It's not because the trade was bad or the parameters. It's about where our entry was. And I realized after about 3 months of taking breakouts and getting my ass kicked by hitting stop losses, going up and down and breaking even, I realized that it wasn't about my stop loss and I needed to shift my entry. Like if I would have taken this trade right here, I got paid. Right? If I would have taken this breakout trade right here, I got paid. Took a breakout trade right here, I got protected at least to break even. Right? The same thing here. Right? This would have been one of those big reversals where I was like, hey, I'm just going to stretch my stop. If I had my stop twice as big, I'm like, oh, it's twice as big. It would have taken me out here. Right? But imagine I waited, right now we would be maybe heading toward a loss, but imagine I waited even just for this to break the 50. Right there. Okay? My stop loss was 30. Okay? And it would be just about there now. But I would have had an opportunity to get to break even because there was enough in this market still to push it that direction. Right? I could have got my stop loss to break even here, and I would have got a BE, or I would have got 5 or so pips in this move, not taking a stop loss. Right? You have to get into these things at these close to these EMAs, right? Or these pullbacks that are going to give you the pips, right? They're going to give you those opportunities for pips. We want to shift. Just take your entry from here, move it to here, right? Move it to right there, right to that 50. And that's the one that finally broke it, closed on the other side, right? And you could have taken, you jammed your stop, you could have taken 10 pips. You're still moving your account forward. Because what happens here, okay, when we break structure, this will be the last thing we do. And I don't know how full of a rant I'll get into, but when it's up here, when it's breaking through these higher highs, you don't have a target, right? You get into it here, you can target that previous high. You get into it here, you can target that previous high. You get into it here, you can target it. Or at least when it gets back to you, you get protected. When it's up here, you have no target. So it's all risk. If we're using our risk reward and we're using structure as targets, when you enter this trade up here, it's all risk. Because you're just hoping the chart just goes into this blank area, which the chart doesn't like to do. It likes to reverse, and it likes to pull back, and it likes to be in these. Now look at this thing's breaking structure the other direction. Now I'd start to maybe look for this to go down. Break some more structure, break that 238. Maybe there's a nice heavy reversal to come. Right, to close out the weekend, which would probably make sense with how the day closed yesterday, right? And after this big old push after news, there's probably a whole bunch of people up here like, hey, let's take some more profit. But just shifting your entry from here to here is going to completely change that game. And being confident enough to just take your 5 or 10 pips and not worry about it. Okay? All right. So that's our boot camp, day 14. I want to tell you guys, we've had this conversation. A lot of people have been with me for a while. Really struggle with just letting the account grow. And I keep talking about, I like to, 100%. Okay? One thing I talk about a lot is money balls, right? I talk about hitting singles over and over and over and over again. And I want you guys to know that the long-term trading is not to do 5 to 10% of it. It's just not long term. Anybody who says they're doing that, they're not going to show you a MyFX book or how their trading has been going for the last 6 months, because they're going to have these big, huge months and these big down months. Because that is too much risk. We want to minimize our risk, maximize our rewards. And for me, risk-free is all I want. I will take every single trade risk-free. I do not care if it's 2, 3, 10, 40, 50, 100. I don't care as long as it's something. And lots of people get lost in this moment where, and I had this conversation with one of my personal coaching clients yesterday, is that as humans we have this we need this some sort of validation, and it's very internal, because trading here is just you and the charts. You don't need validation from anybody else. What you need to do is get your money to grow. If you can make your money to grow, that's success. Whether it's 1%, 5%, 10%, 20, half a percent, it doesn't matter. Money growth is what is important. That's what success in trading is. It's not about how much, it's about positive moving forward. Okay? Your settings for the support lines, my lines are showing up on the 1 minute chart. I don't know. I don't know what you mean. Okay, we should only risk about 1% a trade. So if you have to lower your lot size, or if you're trading a small account, it's going to be a tough place to be. A $500 account on a US 30 chart, it's pretty tough to risk 1% a trade unless you're with the broker and they go all the way down to 10 cents. And so the one thing here that you guys need to understand is that it's just about moving your account forward. In order to become a successful trader, it's not about how much you move, because anybody I sit with, and I sit with some of the most successful traders in the world, they're not getting 5, 10, 15% a day. They're just not, because they know in order to get that, they have to risk too much. And if you don't treat your money like $1 million account, if you don't treat it that way, it'll never be $1 million account. If you're going to treat it like it's a $500 account and risk the whole thing every trade, it will only ever be a $500 account. And I know it's a tough mindset and a tough position to be in when you're looking at your account and you're doing $2, $3, $4, $5 a day or $10 a week. I understand that. Remember this. This is something you guys need to engrave in your brain. Compound interest, the only thing compound interest needs, it doesn't need a ton of money. It doesn't need millions of dollars. It only needs time. The only thing compound interest needs is time. And if you don't give it time, you will never get it. Because if you think compound interest is 50% a month, you will do 50% a month, 1 month. You'll give it all back in a week. I promise you, shooting for those things, you're just going to give it back. Let compound interest do what it needs to do and just give it time. Because a $500 account can become a $50,000 account in a year at 1% a day. And when you're at a $50,000 account, trading pays the bills. Pays the bills and then some. And once you know that you can do 0.5% or 1% a day consistently, you consistently have profitable gains in your account, you can put everything in there. Because the problem is, right? The problem is here at a $500 account, you're going to risk it all. You're going to get 10%, you're going to give 10%, you're going to get 5, you're going to give 5, you're going to get 20, you're going to give 20. There's no consistency. So how do you find trust in even yourself to put your money in there? To go and say, you know what? This month I'm going to put another $1,000 in there. Next month I'm going to put another $500. Next month I'm going to put another $1,000. Oh, I got my tax return. I'm going to put another $1,500 in there. How can you do that if you can't trust yourself to continually move that account forward? That's what's important. Whether it's 1%, 5%, 10%, it doesn't make any difference. It's just that it's moving forward. Because once it's moving forward, you can put everything into it. Like imagine you knew, you've tested, you've gone 6 months, you've done 5, say you did 5%, 6%, 7%, 4%. You averaged 5 to 6% every month for 6 months straight. You'd probably feel pretty comfortable putting all your money in there. All my extra money now that comes out of my account goes in there. It goes in there. I put another $500. I put $2,000 in. I get my tax return $3,500. I'm now trading with 10. Now I'm trading with $10,000, and I did 7% this month. I made an extra $700 USD this month. And if I don't need it, I don't need it. I'm actively putting it into a place where my money is going to give me a return, and I know that I can do it consistently, patiently, and I'm not risking the whole thing. Because that's the name of the game, is capital preservation. If you can preserve your capital and make good gains, whatever those gains may look like, your account will move forward. And then it gets to a point where you can trust yourself to fill it up. I need everybody here to find that mindset and just be comfortable with what we take. Okay, that's it. And once you do that, trading will become patient. It will become less stressful. It'll actually probably become boring, which is how it's supposed to be. Trading is an emotional game. We are people. We are emotional. We are humans. We make emotional decisions. The only time we make decisions are based on our emotions as a human. You make most of the time, unless you're super, super disciplined, you make decisions based on your emotions. You want to buy a car? I like it. I love it. It looks great. I'm excited to drive it. I buy it. I need a house. I got my kids. I need to make sure they have everything they need. That emotional decision, okay? We need to understand that those emotions need to come out of trading. It should be boring, because if it's exciting, it's also really hard on you. It should be boring. It should be, I got 3% this month. I got 11% this month. That's how a trade should be. That's how it's supposed to be. And you need to find that mindset in between there, where you're based on a set of rules, you're letting your account move forward, and just let trading be trading. The one thing that a lot of people can struggle with is that there's trading, they need to show people how good of a trader they are. They need to validate that they're having success here because they're paying monthly, or they can't lose money, those types of things. There's this validation that lots of people need that trading wants you to feel. You don't need to. All you need to do is move your money forward every month. You do that for a year, and you'll never look back. Ever. Never. You will never look back at trading and be like, it's not working. Because it is. It may not be working to 50% a month like some crazy people, but I promise you those people, they don't last. They don't stay long. They don't last, because every time they go and do that, they give a bunch of it back as well. Okay? So, I love you guys. Get patient, be comfortable with the profits you take every day, and just let that account move forward, because that is what a successful trader does. Love you guys. Have a wonderful, wonderful weekend. We'll see you on Monday. I don't know what Monday is. Monday is a psychology day. I think we're going to talk about theft of comparison on Monday, which we have a lot of because we have a nice Telegram chat where lots of people put stuff in there. We want to make sure that we're on our own journeys. Okay? So